So interesting thing, guys, is during our the last live class we had, I was talking to you a little bit about gold and silver. I was telling you about let me put my camera on. Hold on. I was telling you about gold and silver. I was telling you about the prices, the price movements, uh, and then our president, uh, Donald Trump, and his tariffs and how this has been affecting asset prices. So you'll see changes. There's been changes in prices. People are concerned about what's to come, and this has to deal with the tariffs, which we learned about recently in our class. So I was telling you how markets move up and down, right? So for example, the last time we had spoke, which was maybe 2 weeks ago about this matter, I said gold was 2,900. Now gold dropped back down to 2,800 because that's what happens, right? Prices change and shift day by day. So you could be looking at something today, 2 weeks ago, and I had said, "Oh, gold is going to go up in value," right? But right now it's down in value a little bit, a couple of percent. It's down. Is down, a teeny bit percentage wise. So what does that mean exactly? Was I wrong? Was I right? But it's like I told you, if you're looking at this type of stuff every day, it'll drive you crazy. It'll be up one day, it'll be down another day, it'll be up another day, it'll be down another day. And unfortunately, what that means though is that if you thought you can make money quick, that's not how it works, right? The way investing works, the way the market works, the way opportunity is, it's not a get rich quick scheme. You hear people buying a stock and it shoots up and it goes down. That's called gambling, guys. That's not investing. That's called gambling. Okay. So market movements based upon economic activities create long-term directional changes, months, years in terms of changes, not days and weeks. So if you look at where gold was before Donald Trump discussed his tariffs, it's still at a higher point before that time, right? So let's say last prior time, but there's still volatility because this is what people do. It shot up in price. So when it shoots up in price, what do people do? They sell it because they want to make some money, right? If I buy something for $100 and then tomorrow it's $105, guess what? I want to make my money right now. So when something usually shoots up in price, people sell it and then it actually pulls the price back down. That's how the stock market works. Okay. So if something's $100, it goes up to $105, and some people say, I want to sell and make a profit. They'll sell at 105 and they'll make their little $5 on each share. Because a whole bunch of people are selling, it actually pulls the price down. So now it can go back down to 102 or 101, or it can even go down to 99 because people sold in anticipation of the rise. So that's why you see that volatility of prices going up, prices going down every day because people are buying and selling and buying and selling in. Someone else tomorrow might say, "Oh, gold dropped back down. I want to buy in," and you see it go back up, right? That's how it is. So in the long run, 6 months, 9 months out, if certain economic factors trigger recessionary fears, meaning the overall economy is not in good health, you're going to see gold spike up because people flee and pull their money into gold because it's considered a safe, stable asset out of safety. All right. You guys have any questions on that? Any questions or thoughts from the last time we spoke about it? Okay. No questions. I will move on to the chapter here. So this chapter is how to form a business. All right. So forming a business, you could do that today. As soon as we get off of this meeting, you can start a business tomorrow. You don't need to be, there's nothing special about it. All right. So there's three major forms of businesses or basic forms of business ownership. You have sole proprietorships. That's where you're the sole owner. It's all everything's under your name. You have partnerships. We have two or more owners partnering together. You have corporations, which is a legal entity that's authorized to act and have liability that's separate from its owners. Those are the three types of things. And you'll sometimes see uh, LLP, limited liability partnership, or you'll see C Corp, S Corp. Those are different corporations. Pros and cons, generally, the safer the business for you would be the corporation. Corporations are more complicated structures, but they provide more protection to you, the owner, in the event of liability. Someone sues you. Sole proprietorship is the simplest and the cheapest business to run and operate, but it affords the least protection, and you have the greatest financial liability and responsibility as a sole proprietor. So then why would you use a sole proprietor? Because it's cheap. You can start off as a sole proprietor, right? Start a simple business, do some simple things. I'm going to get into that a little bit. If you have questions about what I'm saying, you can unmute yourself and just say, hey, professor, and I'll stop and ask your question, okay? So if I own a pizza store, this is the example I'll use. I used it the last class. You have a pizza store. If I'm a sole proprietorship, if the business of the pizza store is set up as a sole proprietor, I go to the pizza store. Sorry, if I have a pizza store and someone comes in and orders a pizza and they burn their mouth, they burn their lip on the pizza, and they say, I'm going to sue you. And they sue me for $1 million. Let's say they win the lawsuit, right? Who's liable? I am. I'm personally liable for the business, right? I'm personally liable for that lawsuit because I have a sole proprietor. If you're a corporation, I'm not personally liable. The corporation is liable. So the only thing that's liable would be what the assets the corporation has, the pizza cutter, some chairs, some tables, some ovens, some cooking utensils, pots and pans, and stuff like that. That's it, right? Furnishings, fixtures that could be salvaged. So if they sue me and I say, well, that's a big payout. Yeah, right. You just file for bankruptcy. The corporation files for bankruptcy because it doesn't have the money to pay it. But I could have a Lamborghini. I could have a big house, a big car, big whatever. You can't get that, right? Now, technically, depending on circumstances, it's possible to go after an individual who has a corporation, but it's under certain circumstances, like fraud, criminal activity. This doesn't apply in the pizza shop example. Uh, but or if there's a specific contract that was signed between corporation and owners, and the contract does not absolve the corporation of certain liability, it can extend beyond to the owners, like a commercial mortgage will often extend beyond to the owners of the entity. So if something goes bad with the property, the bank can go after the owners. It depends on the contract, right? Everything's contractual. So there are exceptions in terms of liability, but those exceptions are based upon circumstances, right? Let's say I set up a business and I defraud everybody, like Bernie Madoff, right? We steal from everybody. Just because I have a corporation, that doesn't mean that the liability only exists to the corporation. If I defraud people, steal their money, and run away, that's fraud. That's a crime, right? If they catch me and I hide that money somewhere else, they can take that money and remunerate the victims. So the corporation doesn't necessarily absolve you from criminal activity, the liability. But what if the corporation is engaging in criminal activity, but the employees are not the ones involved because they're unwilling and unknowing? So it gets messy and confusing, right? So then what happens? The owner, I didn't know my accountant was stealing. I didn't know they were, stuff like that. It could be messy. But for the most part, corporations have a liability. The corporations are liable. The owners of the corporation have liability from uh, what goes on. So the other thing I'm going to go over with you guys is how do you start a business, right? So you could start a sole proprietorship right now. Okay, you're in New York. So what you do is you go to the county clerk's office. If you're in Brooklyn, it's in Adams Street or somewhere around there. You just Google county clerk Brooklyn or county clerk Queens or county clerk Bronx or wherever you are. You get on the office, and you say, I want to set up or register a DBA, doing business as. So it's a name that you could do business under, right? And they'll tell you, okay, you have the documents. And no, I need the documents. Where can I get it? In Brooklyn, in particular, they'll direct you exactly. They'll go across the street to so and so address and buy these documents there and get it notarized there and bring it back. And you go there and you buy the documents from the guy. You fill it out with your business, John's Electronics or Sue's Cameras, and you fill it out. You sign in front of the guy. He notarizes it. Boom. You come back to the county clerk. You pay it like I don't know what the fee is. It used to be like 100 something bucks. You pay the fee. There you go. You now have a doing business as name. You can do business as John's Electronics or Susie's Cameras. Then the next thing you do is you go to the IRS website and you file for a TIN, tax ID number. It's like a social security number for businesses. Instead of calling the business's social security number is blah, 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 you say the business's tax ID number is blah, blah, blah. So that's what it is, right? So you get a tax ID. Guess what information they need? The information you just got, the DBA, right? What you're doing. So you are a sole proprietor. So in my case, it would be Christian Washington would be the sole proprietor, DBA, doing business as whatever, right? John's Electronics. So that's how you would title it, sole proprietorship, DBA is John's Electronics. I'm the sole proprietor, Christian Washington. And now you have a tax ID number that you use to report your income, expenses, and losses or profits to the IRS. So you have a DBA, I could do business under this name. You have a tax ID, right? Now with that information, you can now go to the bank. You can set up a bank account for your business. Now you have a business bank account. Just keep the minimum requirement in the bank account. Then you go to New York State, New York City, and you can collect taxes. What's it called? New York's when you buy something, there's this tax on it. I'm just sorry, my brain is just not working so well to remember exactly what it is. Sales tax. Okay. So you have sales tax. So there's a certification, a form you fill out with New York State. And then you have the ability to collect sales tax when you sell products. And armed with those things, you can now, and you don't always necessarily need the sales tax certificate because some things that you buy and sell don't require sales tax. So those places won't require it. But things that do require it will require that certificate or certification for sales tax. It allows you to collect sales tax because you're going to have to pay sales tax on the products you sell. So you need to collect that sales tax from your customers. Now, armed with those couple of things that cost you a couple of $100 to process, bank account, a DBA, a tax ID, the ability to collect sales tax in the state you do business in. Now you can go to a wholesaler, a distributor, a merchandiser, and buy products wholesale and sell them. You sell them door to door. No one does that, by the way. You can sell them online, eBay, Amazon, Etsy, whatever, wherever, whoever. Maybe a specialized market. I use the example of collectible cards, sports cards as an example of the last class. So, they have their own markets. I'm not sure exactly where, but I know there's online markets you could sell stuff to. right? Uh, some distributors may require, companies may require specific information. They may say, do you have a brick and mortar store? And some distributors, if you don't have a brick and mortar store, they don't want to do business with you, right? Particularly with collectible cards, you need to have a brick and mortar store, but not everyone does. Not everyone requires it. Some people don't care. Sure, you're online, okay. Uh, that's how it is. So you could literally start your own business tomorrow and a couple $100 in your pocket. What are you guys into, right? And you can start selling that tomorrow. It could be a side hustle, you know. Look at the numbers, look at the expenses, look at the income, look what you could buy, how much margin you could buy, how much is shipping, uh, how much to buy Uline free shipping stuff, and or some other shipping third party shipping companies that help you ship small stuff. I don't remember, it's called Pirate Ship or something. I don't remember what it's called. Uh, Whatever. Right? You're a sole proprietor. You're an entrepreneur now. You figure out how to make some money. So that's essentially how you could start your sole proprietorship because it's cheap. It's easy to do. Just no one teaches you this. No one tells you this stuff. Well, now I'm telling you, this is how you do it. All right. Uh, you can start your business. You want to start buying things wholesale. You go to the retail store, something's $50. You buy wholesale, it's $30, 25, right? And you sell it for 50. But you can't buy one item. You got to buy maybe 50 of them, right? Because it's wholesale. You don't buy one, you buy a whole bunch, and you sell it for a profit. That's how it works. So as a sole proprietor, you are able to start your business very cheaply, but you have all the risk. If you're just hustling out, you know, from the side of your house, a small side business, there's probably very little risk, right? You ship something to someone, it breaks. I was going to sue you for a $10, $20 thing, right? People sue you, like if you started a restaurant, you wouldn't start as a sole proprietor, right? Because that's a big venture, a lot of capital involved, employees or just whatever. You're putting a more sizable sum of money into starting a business like that. You don't do it as a sole proprietor, right? You'd set up probably an S corp, a C corp, or maybe an LLC, and that's how you'd start that, right? If it's a partnership with other people, you don't have to do that. It's still S corp, and the owners are X, Y, and Z. So sole proprietorships are really like starting out, a couple $100, scraping by. Let's figure it out. Let's test out the market. Let's see what's going on. Let's make a couple of bucks here and there. And you can always convert from a sole proprietor to a regular business, right? You talk to maybe a CPA that can process and do that paperwork for you, and pay them a fee and let them do that for you, or figure out how to do it yourself. You guys have any questions on that, or you're clear? All right. So moving on, uh, that's sort of the advantage and disadvantages there, right? Partnerships, as far as your test is concerned, you're just looking at these definitions, right? General partnership. What's a general partnership? A partnership in which all owners share in operating the business and in assuming liability for the business's debts. A limited partnership is where a partnership with one or more general partners and one or more limited partners. What does that mean? Limited partners don't have the same authority as the other partners. So they can't maybe buy and sell, manage, direct, withdraw, do things on behalf of the business. So they own a part of the business, but they lack control or certain controlling measures of the business. It's limited. So that'd be like, for example, we buy a financial property, financial investment, some sort of financial asset. And the management team or the general partners are the ones managing the asset, right? Building, developing, creating something, doing some sort of labor work. The limited partners may not have the expertise, but they may have the money, right? So they're putting money up. So they're what's called silent. They're like a silent partner. So you may see that in limited partnerships, right? Where you're able to bring in assets and finances from limited partners, and the management team, the general partners, are the ones actually structuring the deal, doing the work, and there's some sort of a sharing arrangement in terms of asset profit sharing arrangement between the partners upon sale or something of that sort. So all these different businesses, they all are structured different ways, usually for tax purposes. It's almost exclusively for combination of tax and liability purposes. All right, so it can be confusing, but you don't have to know that. You just have to know the definition. All right, so yeah, you see the example I gave there. All right, MLP. You'll see massive limited partnership with like oil. Uh, you'll see oil companies use master limited partnerships. So you can invest in an oil off-site drilling site for oil. Yeah, if there's oil somewhere or they suspect there's oil somewhere, it's an investment, right? You got to have the rights and the manpower to drill the oil out of the ground. What if there's no oil? What if there's not a lot of oil? You don't know, right? So there's risks and liabilities. So they raise money and raise capital for people to invest in these opportunities if they hit oil, and it makes money. But massive limited partnerships have certain tax benefits. It's everything is tax. It's about tax this, tax that. How you don't tax it, you do this, do that. That's what all these entities are about. So you ask your accountant, oh, what do I do? Depends on what the accountant does. Certain accountants specialize in the specific industries because they've learned the industry. If you hire one of the big four or big whatever accountant firms, the major accounting firms, they have their own divisions. You're in one industry, they got their team that handles that industry and they know how to handle it. And you pay for that if you're on that level. All right. So so the C corp is like the conventional corporation, standard corporation. Most businesses that you see that are on the stock exchange, they're usually C corps, right? You have shareholders. Those shareholders can own an equity position in your company. You could sell shares. Uh, it enables people to have share and ownership. That's the C corp. There's different types of corporations, right? So these are all different types of corporations you could know, not for profit, domestic, which is alien corporations, so on and so forth. Remember the definitions because this is the stuff that's on the exam, right? And the advantages versus disadvantages of corporations. They say double taxation. Double taxation means that the corporation pays its own separate tax, and then when you take distributions from the corporation to yourself, you pay your own personal tax. So if you're a smaller business, not like a sole proprietor, but less smaller size business, maybe you're doing less than $1 million in revenue. You're making margins of 150, a six-figure margin for yourself. Uh, you do an S corp, right? Or flow through entity, something that can flow through to your personal lifestyle. So the double taxation usually applies more for like the tax issues are more so for C corps. There's just so many. You don't have to know all of them, right? That's like a conversation for your CPA. What do I do? What's my business? Their job is to sort of figure that out for you, or they should try to figure that out for you, right? So I mentioned about the S corp, right? Uh, Another type of corporation. It's a unique creation. I'm telling you, it's good if you're looking to step up from sole proprietor to a corporation. S corp's a good middle ground there. Um, the C corp would be good if you are looking to raise capital, maybe take your company public. Then you sell shares. The C corp is good for that, but you could do an LLC as well because maybe you're only going to have a couple of partners, which leads us to LLC. LLCs are similar to S corps, but without the special eligibility requirements because you need to have certain eligibility requirements. Okay. So advantage of LLCs, a limited liability, choice of taxation. So it's think of the LLC as like the flexible corporation. It's very flexible, what you can do, what you can't do. But that applies to maybe you're less than 100 members. I forgot what the number is. So if you're looking to grow big and sell and have shares, like a core like a Google or something, you're gonna need to be like corporation. But the LLC is a super flexible corporation. You need flexibility in terms of the way owners, what powers owners have, what they can do, what they can't do. You can do some cool stuff. You see LLCs are using estate planning sometimes because they use it to give certain shares of the LLC a artificial decrease in value from a taxation standpoint, an estate plan taxation standpoint. You guys probably don't know what I'm talking about right now, but that's okay. Uh, it's flexible. You could do some cool stuff with it to pay less tax, some cool stuff with it to pay less estate tax. You could do some cool stuff to transfer assets to people and do things, and it's all you could do some funky stuff, right? But that's rich people problems. Okay, that's rich people problems. If you got money, then the people need to know how to funk these out, and do some cool stuff with it. Uh, if not, then don't worry about it. Just get an S corp. Okay, get your tax ID, sell some stuff on eBay, Amazon, start getting some distributors, wholesalers. Start somewhere. So one thing you can do is merger and acquisition. This is where companies can either merge together as one new company or buy another company. And sometimes an acquisition, a merger is an acquisition in some ways, but they're considered merger is one thing, acquisition is another thing. The reason why I say is because sometimes a company acquires another company and it kind of acts like a merger in terms of how the hierarchy and the organizational structure changes. Chemical Bank and Bank One merged. This is many years ago. And it was supposed to be an acquisition, but really it became like an inverse takeover where Bank One really took over the company. And same thing with Chase. I think Chase and Bank One, Chase purchased Bank One, but they used the Bank One CEO, Jamie Dimon. He pretty much used all the Bank One systems for Chase. So, that's how it is. The technical definition of merger and acquisition is one thing, but what really happens sometimes it could become a little different. And that's important to understand from a practical standpoint, not necessarily a definition standpoint. This is in terms of how mergers can be vertically integrated, horizontally integrated. Vertical is where two companies in different stages of the business. Um, the joining of two companies in different stages of related businesses. Horizontal is the joining of two firms in the same industry. So, like, horizontal would be Coca-Cola buying, I don't know, another beverage company, right? That would be example of a vertical merger, right? And then I think there's an example here. Here's a good example, right? So, vertical merger, soft drink company buys an artificial sweet company. Sorry, soft drink company buys a mineral water company. Horizontal, right? Because they're both beverages. And then here, a soft drink company buys artificial sweetener, which is a sugar company. Vertical, right? Companies in different stages and related industries. Okay. And here you have a soft drink company buys snacks. A conglomerate merger. Companies in unrelated industries. Okay. So why is this chips unrelated and why is this sweetener related? Because you use sugar to sweeten soft drinks, right? But no one's using chips to sweeten. You don't use chips to make soft drinks, but they are almost companion in some ways, uh, but they're unrelated. All right, so you know, well, a better example would be like if a soft drink company bought uh a mining company, you know, totally unrelated. But this would make sense in terms of this is something that could happen, right? Soft drink company buys a beverage company. Sorry, a snack company. All right. So, by the way, the reason why you might want to buy out a sweetener company is because you're using artificial sweeteners in all your drinks, and you want to have control over that supply chain and all that stuff. So you may actually just want to buy the company. So that's where they're related but different. So leverage buyout is where you borrow money to buy out another business, and that money you're borrowing is usually through raising equity, selling equity positions in your company. So you're creating shares of stock in your company, you're selling those shares to buy out another company. Uh Sometimes the leverage buyout the buyout could be financed through other creative or alternative means, but is usually through debt, right? It could be unsecured. No one's going to provide an unsecured loan, but leverage usually means a debt buyout. How you're leveraging, meaning where you're getting that money, could be selling shares or leveraging shares or taking on debt from the company. However, you're borrowing, right? So, selling shares is different though. It's not technically leverage. Leverage is debt, but you could use your shares as collateral, is why I'm saying that. You could take out shares, use your shares as collateral, then borrow debt against the collateral of those shares to then buy something out. So there's a lot of creativity in terms of how these are structured. That's why I'm mentioning that. Okay. It's not apples and oranges. But you're borrowing money to buy another business. Then you use that money from the new business you just bought to pay off the debt. So it could be a cool idea, but I think the economy affects the viability of it. All right. And the last thing is about franchises. McDonald's is a franchise. We know how that works. Franchises are not always the best opportunity for the person setting it up, but they can be viable. So, guys, I'm going to end the lesson here. If you have any questions, you can email me.